your dollar risk. Okay. Defining dollar risk is interesting because now let's say that we just decided we have $10,000 to allocate per position. And this is huge. I can't even describe how big this part of this is. And this is by far the number one thing that if you get this part right, everything else in trading is so much less stressful. I don't know if there's any other way for me to say this. Raise your hand if you've ever stressed out of your mind on a position where it's going up, it's going down, it's going up, it's going down. And you're like, oh my God, it's going up. I'm making money, I'm losing money. I'm making money. And your heartbeat is going up with every single part of the trade. I'm going to shift that for you right now in such a fast way that it will become the easiest part of trading for you, which right now for most people is probably the most difficult part, which is accepting risk. We talked about probabilities, which means sometimes it's going to move in our favor, sometimes it's not. So we're going to talk about managing the moments that a stock might not be moving in your favor and why this is going to instantly turn you into acting like a professional trader. We talked about $10,000. Now, from that $10,000 or the one position that you're going to be allocating, you need to determine based on your risk, your resources, your goals, your education, your training, your skills, how much do you want to risk per trade? So if we have $10,000, I'm just going to throw a number out there and let's use 2%. 2% of that $10,000. Now, what's kind of cool about this is that 2% will the dollar amount of that 2%. So 2% of $10,000 or 2% of $8,000 or 2% of $15,000. That number, that 2% is what you're comfortable risking, but that number goes up and down based on your account size. So you're actually going to be risking more as your account grows. You're going to be risking less as your account goes down. But here's the thing. Once you mentally accept what that dollar amount is per trade, that dollar risk per trade, now you've accepted that as a business expense. So that's something that's really important. Defining your risk is accepting a business expense. Now, here's the question I get all the time. What's the right number for me? What is the right risk per trade that I personally, Pete, tell me what I should be risking per trade. Well, let me ask you a super obvious question. How much do you normally make? Let that sink in for a second. If you've never had profits, if you haven't had reliable profits, how much do you normally make on your winning trades? See, trading is a business like anything else. So how much are you willing to put in harm's way based on how much money your business grows? When you try to make the stock market make you money, when you're trying to buy stocks, what do you normally make? What revenue does your trading business produce? If you don't have any revenue, that number should be maybe even 0.5%. If you're consistent and you absolutely know what you're doing, you understand when to size up, you understand when to size down, you understand how to work orders, you understand you're disciplined with taking losses, you're disciplined with holding trades, maybe that number goes from 1% to 4 or 5% because you really understand what great opportunities look like. You understand when order flow is right there and you can get in there and size up. You need to determine what number is good for you. And then if a trade should happen to move against you, you're like, I'm out, moving to the next trade. That was a business. That was a part of my business plan. That's a business expense. I'm okay with that. I was okay with the risk before the trade, and I just take the trade. And you know what? As soon as you take that trade, you feel amazing because you did what you planned to do. You don't feel amazing because you bought a stock and it didn't make money. You feel amazing because you did what you said. Next time, it'll move in your favor. Next time, maybe it will. Next time, maybe it won't. What's important is you know what your business expense is. And if and when you have to pay that bill for that business expense, which we call a trading loss, you just take it and you move to the next trade. I am telling you, that little segment that we just covered is by far the most important part for the mentality of successfully taking money out of the stock market over time. Because as long as you control the losses, you'll be around long enough to understand how to make money. I'd watch that again and take notes.